What up, traders? I am Agosame Odi, the liquidity king and the AUD USD sniper trader, back on your screen. And in this video, we'll be talking about the type of traders that have their activities going on in the financial market and would want to know which one are you currently. So we'll start from the lowest down to the highest. So now let's start with what we call the scalper traders. So the scalper traders are the people that trades the minute time frame and the second time frame, right? Their activities in the market is more on like minutes, like the trade within minutes, and they have a very high level of stress trading the market because you need to sit on your chart. Like really, if you miss whatever candle you're expecting to print before you jump in, that yeah, you've missed your entry. So the stress level is high, but the risk to reward also is very low, very tiny, because they are just catching very few pips in the market. And they have another thing is that they trade a lot, right? These are the people that trade a lot in the financial market because they can stay in a day, take more than 4, 5, 6 trades. Some take as much as 50 trades in a day, right? Each session they have the confirmation they need to take in a trade. And yeah, that is it for the scalpers. And we also have the day traders. Now the day traders are people that have the activity intraday trading. So these people come into the market and just look at the market on an intraday basis. So they look at where price is at and forecast how they are going to trade the market for the day. So they have their activities going on just for a day. They don't hold a position for more than a day, right? And their stress level is also high, and their risk to reward is also average, right? They can catch 50 pips. They can averagely look, depending on the pair and the pip movement per day, right? So they can catch as high as 70 pips in most cases for a day, and when they get that, they are done for that day. They don't hold a position for more than a day. So these are for intraday traders. For the day traders, their time frame are more like the hourly time frame. So they look from the 4 hour, or the daily time frame, the 4 hour and the 15 minutes. So most enter their trade on the 15-minute time frame. Like me, for now, I'm a day trader, so I look at the daily time frame, understand the structure. 4 hour POI and 15 minutes, 1 hour 15 minutes, we look for entries. Yeah, so those are for day traders. Now the third is the swing traders. Now the swing traders are more like the people that look to hold on position for like 1 week, 3 days, 5 days, 1 week plus. They look at the bigger picture, but in more like the medium way, right? They come into the market, go on to higher time frame like the weekly time frame, the daily time frame, and most of them I know enter a trade on the 4 hour time frame, right? So these people have very low stress, right? They come into the market and they have a very high risk to reward, right? They come into the market, look at the chart, and wait for the market to present itself with the best opportunity. And what they simply do is they enter the market and they catch a lot of pips. Some of them catch close to thousands of pips. Some of them, because you're looking at it from a bigger picture, right? Trading the weekly time frame down, scaling down to the daily time frame, down to the 4 hour time frame. If you're looking at such data, then you're averagely looking at catching like 100 pip plus trade setup. And we have the position traders. Now these are more like the big guys, right? The real participants in the market, because the market is traded by banks and many other professional financial organizations that have their activities in the market. Now, what these position traders do, they come into the market and look at the market from the overall perspective. Like, what are we looking at for the annual move of whatever currency pair they are trading? So their activities are from the yearly time frame, the monthly time frame, the weekly time frame, and most of them enter their position from the daily time frame. So you can see those are very patient persons, because for the market to really materialize and come down to their level and give them the confirmation they need will take a very long time. So these traders are very patient, waiting for market to give them whatever they do, and they hold position for years, they hold position for quarter. Like they're more, when they look at taking off position, is more like when we're in the second quarter, third quarter of the year. Then they come and look if the market will still do whatever they are anticipating for that year. So that's it for the position traders. And yeah, so I would want to know in the comment section, what kind of a trader do you want to be? Or if you're a newbie trader, what trader would you want to aspire? What trader are you aspiring to be? And yeah, these are the major traders having activities in the market. And yeah, in the description you'll see my Telegram link to join my channel, where I post free trade signals and building the biggest community in the Forex industry. Write your thoughts in the comment section, and like, share, subscribe if you found value. Hit the notification bell and it will notify you whenever I drop value on my channel. And yeah, I'll see you in the next video. Peace out, guys.